traders, welcome to the TMT special edition video on gold for Tuesday, May 24th. And this video, we go out to our subscribers. Wanted to send that out there to show you $14.95 bi-weekly video. Some great technical analysis work on the asset class of gold and crude oil. You get that both bi-weekly on Saturday for $14.95. All right, so let's get right into it. As we know, gold has been making a move, and we want to basically track gold because it's a great trading tool. It's a great asset class to have in your portfolio and as a day trader as well. So let's get right into it. Now we see here we have the commitment to trader reports, and this is something that you need to really take a look at and dive into. Not only just for gold, but I use it for the S&P, I use it for the VIX, I use it for gold and crude oil, and also the dollar. It's very important to see what the dumb money, so to speak, and smart money are doing. So as we see here, we have large speculators in blue, and we have the commercials, which are the smart money, or the producers, if you will, in the dark red. And when you see here, and how I use this tool is the large speculators, early on the move, they're trending. So this is actually a good sign that if you could pick this up early, you would want to follow the large speculators, okay? Because the producers are always net short. But when you get to a mature move like gold has been, you want to watch what the producers are doing because they're generally right. They basically have an idea saying, hey, I am hedging my gold that I'm taking out of the ground. And let's say, for instance, it's 1250 right now. That is telling me that we are at a mature state in the gold rally, at least in the short term, and that we are looking for a pullback. Now, the commercials, which are the smart money, remember, have been net short the most for the last 3 years, as the speculators are adding and are the most net long in 3 years. So one of them is going to be right, and most likely it's going to be the commercials. So we are looking for a pullback in gold. I'm going to show you some key charts and some indicators to tell you why that we are looking for a pullback. And we mentioned this a couple of weeks ago. I put out a special video early in May, our bi-weekly video, to show you why. And we've had some great trades in gold. So let's get right into it again. Let's take a look at now. Want to get this out of the way, and let's take a look at the Huey. Now the Huey caught on a weekly chart. I like to look at the Huey, the gold bug index. We caught that 200-day moving average, a 200-week moving average, excuse me, and now it's having some resistance and gathered the support at the 8 EMA. Okay, and this is kind of sandwiching it. You can see here we have some sort of a pennant. To logical spot would be for the 20-week moving average, excuse me, and as you can see, RSI is rolling over along with the MACD. So quite a move, guys, since the beginning of January. So this is a mature move for the first move. I do think the longer term picture has a lot of prospect in gold, and I do think that gold will move higher, but not with the shaking out all the longs in the week longs on this mature move. You don't want to buy gold up here at all. All right, now let's take a look at the bullish percent GDM Gold Miners Index. We're at 65, 70%. We were at 80 at one point. Big move, a quick move, far and fast. Here's where right around 40, 50, where the GDM really market gets sold into. We're at 65. We were at 80 at one point. So way extended. We see the indicators are starting to roll over. So be very cautious here when you're looking to buy gold. Again, I'm looking for a pullback. I'll show you some of the charts where some of these downside targets may be. Okay. Now let's take a look at the gold itself. All right, this is the gold spot gold daily, and as you can see here, we had this little wedge that we broke down, and we're on the 50-day moving average right now at 1251.46. Okay, if we lose that, I would suspect anywhere into this area, the zone from 12 to 1220 in gold would need to hold. Otherwise, we would get back down to the 200-day moving average of 1160. 1160, 1180, 1200. That's going to be really my area where I'm looking for in the metal itself. And let me just kind of get that back to you guys. So this would be a real overshoot of 1160. More likely 1180 to 1200 is going to be my area where I'm looking to buy gold. Okay, very important spot. And again, if it even gets there, I'm going to start to nibble small because gold or any commodity usually overshoots the move. Okay, just keep that in mind, guys. Weekly chart, you can see we have some sort of an upward channel here. Caught that capped the rally of 1318 on the 200 week moving average. A lot of overhead resistance. You can see the supply above here. So again, no reason to buy gold up here. Let it come back. The 20 week moving average is 1222, and again, the 50 week is 1150. So again, guys, you can see here a lot of supply. 1180 to 1200 is going to be my spot. So this is where I'm looking for to start nibbling into a gold position. Okay, but again, let the week longs get shaken out. Plenty of time to get involved in gold. Here's the GDX daily now. This is the gold miners. Okay, and the reason why I'm showing this to you, we have the GDX GLD ratio. As you can see from this move early on, we have broke down, we broke back above it, and we've been up ever since. Now, ever so slightly, could it be a shakeout? Could it be a fake out? Excuse me. Yeah, but look what's happening. We're starting to roll from the 20 EMA, and I do suspect that we roll back down again. And again, logical spot would be the 2250. That would be your first target on the lower end of the Bollinger Band. But I want to show you some other charts in the GDX and GLD. I'm going to cover that next. But we can't do a gold analysis video without doing the dollar, and which would be the UUP ETF. I'm going to cover this one. I put out a video early in May, and I showed you positive divergence. What we have here, bullish falling wedge. We do overshoot a lot in the dollar, and sure enough, we broke above the 20 and the 50. Very constructive. The bearish pattern, bearish symmetry now has alleviated. So we have higher highs and higher lows now. So this is actually a real good thing for the dollar, not good for the gold and commodity group, okay? So at the moment, the dollar is picking up some steam. And I do suspect that the dollar would probably get to about the 25, at least tag the 200. Is it in a new roaring bull market? No, I don't think so. But I do think that it's something to watch in the short term, which would probably give us a good entry. If the dollar continues to strengthen, then we can get a good entry in gold. And I would suspect to hold gold, because I do see some trouble in equities, and that will be eventually a flight to safety. Okay, so just something to think about here in the UUP. All right, now let's take a look at GLD. Now, these are some of the targets that I have. This is just a very simple Fibonacci retracement. I do have some fib clusters. I'll get into that as the market, as GLD starts to break down. You see we have a symmetrical triangle up above. You see what we have here. We're hanging in here, and we have negative divergence, okay? Our indicators are MACD and our RSI rolling over while price is holding true. This is going to be the area 112.13. First downside target 61.8%. Second downside target of 109.34. These are the two areas I'll be looking for a possible buy trigger. Okay, just because price gets down here, I'm not going to just go and buy GLD or buy gold. I need a trigger. Okay, and that's going to be based on your trading plan. All right, but again, negative divergence, symmetrical triangle. We did break down yesterday ever so slightly. We need to see this break down a little bit more, and even get a small little bear flag back test. And then I think gold will flush, and it'll flush hard. It usually does. Next will be the GDX, excuse me, the gold miners ETF. You could see very similar pattern, symmetrical triangle. First downside target would be the 50% retracement that coming in at 1930, marked here in an arrow. The 61.8%, 1773. I put 18 just for a round lot number. Any one of these two you could start nibbling into. You see what we have here again, negative divergence as price is holding true. So this is going to start to falter, and it will start to break down at one point. Excuse me. And once it does, you're going to flush all of the week longs out that have bought up in here, which is silly to buy something like this when you had to move from $12 to $24, double in 6 weeks. No one wants to buy something like that. You have plenty of time. Please don't chase, especially in the commodities. All right, there's the GDX. Let's take a look at silver real quick. That'll be our last video on silver. And you could see here, same thing. I like silver. I actually like silver better for a better opportunity of a return than gold. Silver 50%, $15, 61.8%, 1461. Those are your two targets in silver. And you can see here we had a classic. Let me just get this out of here. Classic head and shoulders pattern. I also identified that in a previous video. You could see here left shoulder, head, and then the neckline came in nice, perfect symmetry, and we broke that. We filled the gap here, and again, we could possibly look for the gap filled down here, which will eventually get filled. So I would not be surprised if we can get a gap fill down to that 1461. I would definitely be a buyer in silver. Guys, I hope it helps. Again, bi-weekly videos, 14.95 in gold and crude oil, and we actually put some key levels in here as well. So something that it's a must-have in your arsenal of trading. Have a great day. Good luck trading.